I failed at everything I tried.
You had like one of the biggest exits in Asia for IndiaWorld set of properties, 115 million acquisition.
Sify paid me 115 million for IndiaWorld. That same night, their Nasdaq listed stock went up by $700 million. More important than knowing when to enter a business is knowing when to exit a business.
Rajesh Jain started one of the country's first internet companies in the 90s, and today he runs Netcore, business he's grown to $100 million in revenue without ever taking outside money. On this episode of Founder Thesis with Akshay Datt, they get into the .com deal that put him on the map and why he thinks 60 to 70% of the marketing budgets are being wasted.
Companies are not democracies. Think of them more like North Korea or China.
There were a lot of people making a lot of money on VAS. Why didn't you explore that?
Never build a business where you can be shut down by the government by a regulation change overnight.
Are you the man responsible for the election of Prime Minister Modi? Rajesh, welcome to the Founder Thesis podcast. It's an honor to interview you. Not many people would know you are a pioneer in India's internet space. Before we get into that, what kind of India did you grow up in? How did you end up in the US? Just take me through a little bit of your origin story.
Sure. So, I was born on 15th August 1967.
Oh, wow.
And when I was a little old to understand, my mom said that the nurse who was there in the hospital had told her that in Marathi, that effectively translated was that this boy has been born for the nation. For lots of people on 15th August. So I grew up in Mumbai, and we were, I would say, a middle class family at that time. My mom used to tell me stories later how she would walk with me in her arms from one bus stop to another because she could then save 5 paise on the bus fare. Early memories are essentially growing up in Mahim, in Mumbai, and that India was effectively, if you see the late 60s, more like the 70s India, where there was a struggle for a lot of things, scarcity. But what I do remember is that my father always tried different things. He had spent a few years in Dubai, and that was the heyday of Dubai construction. Of course, the first iteration, if you leave aside what's happened in the last few years. Was a civil engineer. I would walk with him to buildings. He was the structural engineer for many skyscrapers being built in India. It was a unique tech that he had brought back from his stint in the US. So early days, I always thought I would be like my father, a civil engineer, build bridges. Those are the types of books I would see at home. The school was St. Michael's in Mahim, and then we moved to Nepean Road in Mumbai. My father did, I think, a couple of smart things. He, in the buildings and the office buildings that he was constructing, he took a flat and an office in lieu of his fees.
And that appreciated a lot more.
Absolutely. So, St. Xavier's was the school where I spent 8 years, St. Xavier's College after that. But this was an India where it was, there was always this angle around, you never had enough, actually. So the late 70s, early 80s, your options as a kid growing up was primarily either an engineer or a doctor. You had to study very hard because education was the only way you could sort of scale up in life. My father had grown up in a village in Rajasthan, and he got a Tata scholarship to go to the US. And that's how he pulled his family out from sort of very low income, poverty, that kind of stuff. He's the only person who really got educated in his family. And so for us, when I was growing up, he would get a lot of magazines, international magazines from abroad, because he always felt that education and learning, constant learning, is what got him out. And that's the sort of gateway or a passport to a better future. So that was the 70s, early 80s, academically focused. I would study a lot, not much of extracurricular activities in life other than perhaps quizzing, which I had got interested in my school and a little bit in college, maths, standard tech, in engineering interests at that time.
How did you end up in the US?
So 4 years at IIT Bombay, undergrad. Everyone there was aspirational, of course, in that era. And what was interesting was also that a lot of kids at that time, I mean, all of us, really, the only thing was that, of course, jobs available in India, but everyone aspirational was to get to the US. So I think in my batch, pretty much everyone of electrical engineering, almost everyone except a handful would have gone abroad. Many are, of course, still there. Very few came back. So 84 to 88 was IIT Bombay, and then I applied. Then I got into 2 universities, and I chose Columbia for my master's. And when I left, my father told me that, look, you are going to finish your master's in 9 months, work for 2 years in the US and come back. Because that is exactly what he had done in the mid 60s. So for me, the decision to come back to India was already done. So for the education in Columbia offered a 9-month, you could finish actually in 9 months because it didn't require a thesis. So you could just take courses, finish it.
And this was a computer science.
It was actually double E, electrical engineering. But I took a lot of courses in computer science because I had never learned computer science before that. And in fact, in IIT, the only sort of programming course was Fortran, which everyone had to learn at that time.
Right.
But what I had done was, when I was in 11th and 12th, my father had bought a computer in his office. Now, if you think back, it was such an important, that was a game-changing decision in my life, I think. Till that time, I was all civil engineering, build bridges and buildings and whatever else. But after college, 11th and especially 11th standard, I would go to his office. And he had no idea how to use it. So I taught myself basic programming. And then I would spend time on it. It was like this computer which took up a whole room at that time. I just fell in love with programming because there was not much else I could do. So I would make various games. But I fell in love with the idea that you could write software and control actions of a machine. But IIT, I never got the option to actually learn in this. So when I went to US, I was very clear that I wanted to take up at least some courses in computer science department. And that was the flexibility that many of the US universities actually give you. And one of the first courses I took up was actually operating systems. And my advisor there told me that, look, it requires a prerequisite in C and Unix, and you don't have that. I can't let you take the course. So I told him, I said, look, give me 2-3 weeks, I will learn it. But I'm going to only be here for 2 or a little bit more semesters. I've got to take this because then this is a prereq for some couple of other courses in CS, which I wanted to do. My first test in the OS operating systems course, I got 2 out of 20. He said, this is not going to work. I said, one more test. I mean, give me a little bit more time. I spent, in that semester, I would have spent 80% of my time on a single course. And I ended up number 2 in the class in that course. And I think that was sort of the foundational stuff for me to move away from civil engineering to more towards computers. I think my dad's computer plus the experience at Columbia, I think, was very, very helpful.
And where did you work? You worked there for 2 years, right?
I worked for 2 years. It was a very tough time actually getting a job. This was 89 summer in the US. I remember, I mean, there were not many jobs, especially when you're on a foreign visa. It's that much harder as it is now. So I applied a lot. It took me 3 months. I would go to all sorts of places for interviews. But I only got one job, which was at 9X, which was the Bell operating company, one of the regional Bell operating companies. So Telecom, basically. So when I got and those were the days of voicemails. So I got a voicemail from 9x that my manager to be said that please call me back. And I had been struggling for 3 months to get a job. I called him back and he said, "Look, we are delighted to offer you." And I said, "I accept." He said, "Don't you want to know your compensation and the package?" I said, "No, I don't care what it is. You tell me when to start work." So that was sort of those days. I mean, choices were limited, but in a way, each of these then becomes sort of turning points in your life. And those 2 years that I spent at 9x in White Plains, about 30, 40 miles from New York, were I think just fantastic. It was a science and technology center, so a lot of R&D. I started off writing software, but they realized I could speak well. So they would then send me to meet various companies for doing partnerships. So to Cisco, to Lotus at that time. I got to travel a lot. I got to do presentations. I got to be at conferences, events. So a lot of learning happened. Unlike a lot of colleagues or my classmates who ended up doing a desk job. And I would see others, in fact, even at 9x doing just a desk job. But I got the external facing world, external facing work, which I think was very exciting. Otherwise, you end up just being in front of a computer all the time. And that helped a lot. That made me much more outgoing also. And I got to travel quite a bit. Before I was coming to India, one of my dreams was to take the train coast to coast. So I had gone to my manager and said, "Look, it's going to cost the same, but if you give me 1 day off for the meeting in California, I can leave on Thursday evening and I'll reach there Sunday evening. But I can do one of my dreams." He allowed that, of course. So it was a fun time, lot of learning, but I would say it was more of the learning outside the office than inside the office.
Like you got to see the ecosystem of technology companies in the US.
I mean, going to conferences, just being in presentations with senior 9x people at companies. I mean, you got to see how they present, how they talk, how they converse. Which otherwise was very rare for an engineer at that age, at 22, 23, 24, to actually get in the late 80s.
So you came back to India and you didn't look for a job then? You wanted to just be an entrepreneur. You were pretty clear on that.
Yeah, so that I was clear on because I'd seen my father through multiple ups and downs being an entrepreneur. And I was pretty clear I didn't want to work for anyone else once I came back. So there was a friend of mine, Sanjay Jain. He and I had connected in the US. He was a year senior to me from IIT Bombay, but we had not known each other here. A couple of friends had put us in touch saying that, "Look, both of you want to go back to India." And that's how the entrepreneurial journey sort of began. Just around the time when I was leaving the US, we did some work for a US company. We had connected in order to bring that software development back to India. That didn't pan out much after that, but the entrepreneurial journey began. So in mid 92, I was back in India, all set to be an entrepreneur.
And what were the lessons from that? Those early attempts.
So in the first 2.5 years, everything I tried failed. So
Okay.
We tried to do software development. We tried to resell American software in India. We created a multimedia database. I spent a lot of time building a image processing software to sell to doctors and metallurgy companies, but none of them worked. I realized that the software we had built called Image Workbench, at that time I didn't understand tenders, but all these purchases had to happen through government tenders, and tendering time used to be 2 years. And I realized I can't survive 2 years without an order. So that didn't work out. And then sort of it hit me that I know when I came back from the US, I was God's gift to India in that sense, that great education, India, abroad. And what really hit me was when people in the extended family would tell my father that, "Look, your son educated in the US, he's not earning any money. He's just losing you money. And our son may not be educated, but at least he's making money even if he's sitting in a shop or running on the shop floor." Now, my father, to his credit, never brought any of these things up. Never said I should try and be with him. He had a small, of course, civil engineering consulting unit. He said, do what you want. And late 94, I realized that the last venture, imaging venture that I was doing, has to die. It's not going to work. So then I had also got married, just got married, arranged marriage. The first year, I would barely talk to my wife because I was struggling at work. I hardly knew her. So it's almost like everything that was going wrong was going wrong, in life. Then I went late 94 to the US. I spent a couple of months at a friend's place in California. I had a few ideas. So one of the good things was that because my father would get a lot of magazines at home, for international magazines, it would be expensive, but I would get to read the Fortune and the Business Week and those kinds of publications, if I remember correctly. I got a good sense of what's happening globally. And I could see the internet stories starting to come. So this was mid to late 1994. And I connected that then with some of my stay in the US, where I was struggling to get information on India. I wanted to come back to India. I would get my parents to actually send me some of these computer magazines by courier to the US so I could understand what was happening in India. And I realized that the internet could actually connect Indians worldwide, could be this bridge, break geography, the death of distance, as was called also at that time. And what was interesting also is that this connection, that NRIs worldwide had a common problem. They had no idea what was happening in India. I mean, you would go to the library at, say, Columbia University, papers, Times of India, etc., would take 10, 15 days to come. India Today was published only once every fortnight. By the time you got it, news was already 15 days old. So the only option at that time was some of these Usenet news groups, which were there, but very sketchy in information. So I combined the internet emergence along with my own hunger for information on India and my belief that there will be many others like me. And I spoke to a few friends saying, what are the kinds of things you would like? What are things you miss about India? And that then became the sort of genesis for the ideas which helped me build IndiaWorld. But the real game changer, I think, in my life was at that time when I was struggling also in the US, September, October 1994. I came across this book, Competing for the Future, by C.K. Prahlad and Gary Hamel. And when I read the book, I could almost see the business plan forming in my head. Even today, I have a copy of the book with probably 100 post-its outlining the IndiaWorld ideas. So I would read something, ideas would come, I would just stick it in the book. And that sort of was the business plan being formed right there. And then, amazing coincidence, I had gone to meet a person who I've been introduced to, Professor Rajesh Jain in San Diego. So I go to him and I had that book with me. I was reading it on the flight. And I showed him the book and he said, Rajesh, guess who was sitting here 3 hours ago? C.K. Prahlad.
Okay.
So, they were very good friends. And it was almost like, destiny prodding me in a direction where this whole idea of competing for the future, that you have to imagine, there are multiple visions of the future competing, and you have to imagine that future and make that happen. So for me, the ideas sort of germinated there. I came back to India. I had to reduce staff at that time, and I started on the IndiaWorld journey. It was nothing to do with computers in that sense, nothing to do with tech. It was a media company. I didn't realize it at that time. I think it was good because I would have been probably very scared. I was really building a media company. The two things I knew that I wanted to have on IndiaWorld were Lakshman cartoons and India Today. That's what people had told me. That's what they missed most. I wrote out probably 100 letters to media owners in India, just physical letters. I got a letter back from R.K. Lakshman. I met him, and Times of India people were very surprised that, I who's like a random person he was meeting. They said we sit close by and we don't get to meet with him. And actually, when I went to meet with him, I told him, look, your cartoons will appear like this on the internet. Arun Puri and Raj Chengappa from India Today met with me at that time. And I think I'm eternally thankful because some of these really became the content pillars. Amar Katha, comics, which were also there. So a lot of small things put together at about 25, 30 sections became a portal.
And these publishers were expecting some revenue?
Initially, everyone gave it to me for free. The good thing was I would basically show them, look, this is how your content will appear on the internet. Globally, people can access it. And at that time, it was the time of TV channels. So for many people, it was like yet another TV channel being opened up. Satellite TV, basically. The Doordarshan was the only one till, of course, that time in India. And later on, of course, we had to start paying some of the content providers. But the good thing was that early on I could begin with, because I had very limited money. I'd lost some of the money in the 2 years.
This was your US savings that you were using.
US savings, exactly.
I have a question. So the image processing idea which you had was also a vision of the future. Why was this vision of the future more compelling to you? Was it just that with image processing you knew time to revenue is long?
Very good point, actually. When I think back now, I think the attraction of a B2C business, of course, we didn't know all these terms at that time. I think also the fact that I was building it for people like me. The imaging process felt like building for something else, for someone else, a hospital, a metallurgy firm, X-rays. It just seemed very exciting that you could take images, enhance them, count objects in images. But at the same time, the challenge was also that I was selling to people I did not know. Here, these were Indians, just like me.
You understood the problem area better.
Absolutely. I understood the problem very well. And it was early days, and very early days of the internet. Commercial internet access in India came 6 months after I actually launched. I launched in March 1995. Commercial access in India came in August 1995.
What does that mean, commercial access? Like to consumers? Is that what you're saying?
This is on consumer. So till that time, till August 95, the internet access in India was largely through ERNet, the Educational and Research Net.
You found some way to access the internet through ERNet to publish.
Yeah, but then the government realized they had some clause of not allowing education and research network, the ERNet, to be used for commercial purposes. They deemed that I was doing it for commercial purposes. So they cut my connection.
Okay.
The next day, I had to now start dialing the US to upload the information on a US server. So essentially from like 10 rupees a day, it went to like 1,000 rupees a day. I tried to persuade them that, look, there are many other institutions in India using ERNet, but of course you couldn't get through to anyone there.
And even buying the domain would have been impossible from India, right? You would have probably had to buy it from the US.
I had to connect with a person in the US and get the IndiaWorld.com domain at that time, which became a problem later on.
As in, it wasn't in your name. That's why.
No, it was in the name of the US person. So we lost the domain later on. I was not very careful at that time. I had to restart. So we started with, but that's a story comes about a year and a half afterwards.
Yeah, just take me through that journey. Okay, so you launched it. You started getting traffic, I assume.
Yeah, so I realized I had to make money. So I had priced it. So I had kept a few sections free.
Okay.
So I put a price of $59 a year for access to IndiaWorld.
And how did that money reach India? That's again something I'm curious about.
Because keep it in the US right now for hosting purposes.
Okay.
There was an entity I was working with in the US for this. So it would cover at least their costs. So two things happened. One is I realized that feedback came very quickly that look, we're not going to pay you $60 a year. So I dropped that down to $20 a year. And we started getting subscriptions online, people paying by credit card.
But how did discovery happen? Word of mouth.
Yeah, word of mouth, absolutely. So we never did. I put up one ad in India Today International, and I put out, I think, one press release through Business Wire, and that's it. And that was one very big learning for me, Akshay, that because even later on, as people would spend a lot of money on their prop portals, which they would launch in India, for me, the learning was that look, paid money can get a person to the site once, but it's only the content which will keep that person coming back again and again and again. I wanted IndiaWorld to be a habit in people's lives. So we would update it every day, news headlines. We had a email service which would send out morning and evening. So my wife Bhavna and I, we of course built all this together. We couldn't go out together because one of us had to be sitting watching Doordarshan, listening to All India Radio at night. And then from the home computer, basically send out the news. But this rigorous discipline effectively endeared us to Indians in the US. So it was absolutely right. It was all word of mouth.
I'm wondering how you managed to get married without an income. Like that itself was a challenge in those days, I'm sure.
Yeah, this was luckily I got married before I was doing IndiaWorld.
Okay.
Okay. And my wife, we have worked together for 30 plus years. And everything that we've done, she's an equal partner actually. So early days, the news headlines, the comics, there were updates every day which were happening. So there was a reason for people to come back again and again. And because we were the first, I think for about a year, we were the only ones. Rediff launched in 96, early 96. We were the only one. And the interesting thing was that on every page I had this button which said, if you need anything, send us feedback. I would read every email, I would reply to every email which came. The best ideas on what people wanted actually came from them themselves. So some short stories on India. So then I went to Katha at that time. Katha used to publish stories. So I would then, depending on the inputs which would come, I would then find equivalent content providers who would give me that. So people wanted stock market updates daily. So I got the stock market update from DSP, Merrill Lynch. I would get it on a floppy at the end of the day, and then we would upload it. But they would still get it when they woke up in the morning. I mean, if you think about it, the gap was between not having anything and what service we were providing.
Yeah. It was a different time. Yeah.
And of course, cricket scores, cricket updates, all of those things started coming in. So other source of revenue in India that I generated was doing websites for companies.
Okay.
So
Services.
Services, exactly. So I would persuade companies that, look, the internet is the next big thing. You need to have a presence on the internet. So O&M, Ogilvy and Mather and Boyden were my first two customers. So we randomly charged 5,000 rupees a page, did 3 pages for them, 15,000 rupees. Sounds crazy right now. My first big customer was Kotak, Kotak Securities. So we did a full platform. We did a personalized portfolio for them. Imagine 1996, you could have a personal portfolio with all the software, etc., all done. So lots of these things then started happening. And then the advantage also was that in the early days, I started then telling them that, look, you've created the portal, but you need to publicize it. So we started running small ads for them and we started charging for them. Amul was another one. They were in the World Cup in either 96, I think, if I'm not mistaken. And I said, look, your topical can be seen by everyone globally. So they actually paid for being present. So a lot of these small things helped get the revenue stream going in India. The US side got funded with the subscriptions in the early 18 odd months.
Okay. So you said after 18 months, there was that problem of the IndiaWorld domain.
Yeah. We lost the domain. So I had to restart almost. I tried indiaworld.co.in and that didn't really work. very well. That co.in thing was not there. I had to host a server in India.
Even today, .co.in will not work.
Yeah. So we had to host a server from India because we lost access to the US server. So so now look at how things work out actually. I mean, this is like, there are so many people, thankful to life for making this happen. And I keep saying, as an entrepreneur, there are hundreds of moments in your life when you are one little tiny second away from failure. A million things really have to go right for you to succeed eventually. People think it's sometimes overnight success. No, it's like you avoided failure probably more than others to have succeeded.
So true.
So when I wanted to host in India, I contacted Dr. Ramani, who was the head of NCST, NCST used to host or run ERNet. He said, look, we can't allow servers, but why don't you go and talk to VSNL, Videsh Sanchar Nigam Limited. They were a government-owned entity at that time. And there were two people there who were instrumental in getting my server up and running within, I would say, less than 24 hours. That is incredible. I mean, they didn't have a policy. This is a government institution. They had to give me a domain. They had to give me space. I was the first customer for a server, really. There was Neeraj Sonkar and Amitabh Kumar.
When you say space here, you mean physical space, not cloud space.
No. This is, I had to take a computer and put it in their premises.
Yeah.
And they didn't have any policy, but they did all of that. And they said, we'll figure out the policy later. You have a problem. I mean, this is like, when you think about, I'm just a random entrepreneur going to them, the government institution going out of their way to actually help me continue as an entrepreneur. Otherwise, it was the end of story for me.
What domain did you use then?
So this was late 96. Now, so we got the site up and running, but then I realized, this IndiaWorld.co.in is not working. I tried IndiaLine.com as a portal name. That also did not work very well. And in a way, many times out of adversity comes some positive things. So Bhavna and I were, she's quite religious. So we had gone to a temple in early 1997 in Rajasthan. And on the way back from the temple to Jodhpur airport, in the car, we were just discussing, this domain problem. No one's coming to our sites. And in that sort of 2-hour drive, we said, why not try Indian names? So samachar.com, we thought of all of these names. So it was a very contrarian idea because Yahoo was the big daddy at that time. And Yahoo had yahoo.com and everything else was a subsection under Yahoo. And here we were saying that, let's break our sections up into separate sites. So samachar.com, coach.com, khel.com. That's how we started thinking. We registered, I think, about 30 domains after we came back into Bombay. And then I started launching these properties separately. And Akshay, that was the best thing to have happened for us. So out of probably the worst adversity of my life came the best decision.
Why was it so great? Like, why did it turn out well?
So, it eliminated one click. People didn't have to come to IndiaWorld.co.in and then go to a specific section that they wanted. And these names became very memorable. Even today, people of my generation, probably 60, 59, 60 or those, I'm 59. But when people meet up, some of them still remember samachar.com, khel.com, coach.com, bawarchi.com. We had 13 portals like this. 4 worked, 9 did not. But the 4 that worked did extraordinarily well. So Samachar became the news homepage for Indians. We made a lot of money from advertising there. The single page site, we aggregated news links. Khel.com was the cricket site.
So the model also changed to ad supported instead of subscription?
Yeah. So after I lost the domain, I could not take money anymore. We had to just drop the subscription bit. We made everything free. And by late 96, early 97, also ads just started picking up. Yahoo was making money from ads. So one thing I used to do is to go to all these internet conferences, Singapore, US, Hong Kong, and I would learn from what people are doing there. So there was very limited learnability in India. I mean, we were pretty much the only entity doing things. So advertising started picking up there, and we tried a lot of experiments. We tried a gifting service. We tried to make money from transactions. We also became a sub broker for banks for their new issues. There was a resurgent India bonds thing which had come at that time, and we had done a tech tweak, which the RBI had agreed at that time, that we could change the form number in a PDF on the fly. So everyone who downloaded the form could actually, the form would be accepted, because not a physical form, it was a PDF which was being sent across. Now, I realized if I just did a software thing, I would get maybe 5,000 rupees from different brokers or finance companies for this. I got the idea that to become a sub broker. So I said in the form, give me a code which makes me a sub broker. So we got a percentage of the money that came in. So instead of making maybe 50,000 rupees from 10 companies, we made about, I think, I don't know, I forgot now, but 10 or 15, 20 lakhs at that time.
How were people investing? Online payment, or I mean, like a bank transfer or Swift?
Yeah, those NRE, NRO accounts, if you remember at that time.
Okay.
Some of them probably still, all those letters I think still exist.
Right.
So NRIs, because the whole idea of research in India bond was to bring in NRI money into India. I think we had some problems with the rupee dollar rate or something like that, if I remember. So all of those things actually worked out very well in hindsight. And these are all small decisions which may seem inexplicable now. I don't even remember how I would get the idea to make a decision like this. But as an entrepreneur, I keep saying it's never about aiming for success. It's about one more day that you live, you're one day further ahead from failure.
Yeah. One day closer to success. Yeah.
One day closer to success. So you don't plan for success. Most startups actually fail. So, but we kept trying. I mean, I would keep trying out things. We were 20 people in our company at that time, running 200 corporate sites, 13 of our own sites, all packed in one small office in one point.
So, for listeners who may not be aware, so you had like one of the biggest exits in Asia for the IndiaWorld set of properties, 115 million acquisition. When did that happen? What led up to that?
So that happened in late 1999, about 5 years or so after I had started. So I was constantly trying to raise money. Everyone else in that time, 97, 98, 99, and the internet boom had started in India. A lot of capital started flowing in.
Like there was capital, like VC money flowing into India?
Yeah, there was investments happening. Yes. So I think there were a few VCs at that time who were investing. Rediff had raised quite a bit of money.
Rediff, yes, that's right. Okay.
There was India.com, which had been launched. So a lot of different sites are getting launched at that time.
Yeah, I remember India.com had a Times of India front page. Yeah, INDYA India.
INDYA, yes.
Yeah.
And so while I was trying to raise money, one advantage I had was I was profitable. I was not burning capital, even though we were very small, probably 2-3 crores or so in revenue at that time.
And how many eyeballs?
So
because I guess money raised would depend on eyeballs, right?
All that multiplication used to happen in terms of eyeballs. Samachar had about 4 million page views a month, if I'm now remembering correctly. It's a great question.
Okay. Which is pretty good. 4 million page views is pretty good.
Yeah. And for us, what happened was Samachar was a single page site. It became the sort of default start page for Indians. So morning, evening, you just get the headlines all together on a single page, updated round the clock. And it was a bot which would do it. So in fact, think of it as a precursor to Google News. I had no human being doing any of the updates. Then a lot of page views, of course, on Khel.com, Coach.com, Khel, where all the updates, basically you could do a reload. You are updating it in real time. Scores were updated in real time.
A Coach was a search engine. You launched a search engine.
Yes. So I copied Yahoo. Code was a complete directory and a search engine. So we would crawl sites and then do the search on. So then, so I was trying to raise money, but where we had got some offers.
But the reason or the motivation to raise money was purely peer pressure. Like you saw Yahoo is raising money and all these .com companies are raising money, and because if you were profitable, the pressure to raise money was not an internal pressure.
Correct. So the reason to raise money was I realized two things. A lot of them were spending on advertising. And I realized that maybe we also need to spend. You're exactly right, peer pressure. Others were doing it, so maybe I had to do it. Also, I realized that if I have to even hire some people, no one will just join a small company without external funding at that time. If I had to add, I built professional management. So at that time, I started talking to a lot of potential investors in India and outside. So, and got a couple of term sheets also. They didn't eventually materialize. But then what interesting development happened was in, I think, September 99, Sify had gone public on NASDAQ. So they were an ISP. They were connecting internet connections, dial-up connections, lease lines that started happening in India. And Sify was very keen to do a AOL-like play. So content plus connectivity.
So one question: Sify is Satyam Infofe. This was connected to that Satyam software company, Hyderabad based.
Started incubated, as it were, or initial funding came from Satyam. But then Satyam Infoway was an independent company. It had its own CEO, MD, Ramraj, completely delinked in a way from Satyam's computer services at that time.
Okay.
So Satyam Infoway was the one which went and listed on NASDAQ. Because we were there, the Chinese companies had done very similar. Many Chinese.
Alibaba. And,
no, Alibaba came later. It was Sina, Sohu, NetEase were all listing on the American on NASDAQ.
This was like peak .com euphoria.
Absolutely. They were like
Okay.
peak. So they had raised $80 odd million. And their banker was DSP Merrill Lynch, but their Indian arm was DSP Merrill Lynch. And coincidentally, I had got a banker, DSP Merrill Lynch, to help me raise capital. So they were trying to help me with HNIs, raising about 10, 20 crores at that time. And then Sify had raised money. Their stock was going up every day on NASDAQ. So that's what you said, the euphoria and the boom which was happening. And also, I had got another offer at the same time from a US company, mail.com, which owned the domain india.com. So proper India, INDIA. So they wanted to do a India play. And they were looking to acquire a portal.
And this was also NASDAQ listed, mail.com.
Yeah, I think mail.com was NASDAQ listed. I think that's how everyone was getting the money, I think.
Yeah. Those were crazy days, yeah.
Absolutely. So going from nowhere and struggling to raise any capital, in the space of effectively 10 days in October 1999, I had two competing offers. And in the space effectively of probably 2 or 3 weeks, the valuation went up from 13 million to 40 million, then 70, 80 to 115 million.
Oh my God, that is phenomenal.
It was surreal.
Right.
And the entire deal then got done in about effectively 15 days. What due diligence do you do when you're paying 115 million for a company which was probably less than $1 million?
Yeah. Oh my God. What do you think led to this kind of decision making? I mean, this is not isolated decision making. Like a lot of people burnt a lot of money on .coms. I think the most famous, like the pets.com or whatever those names are there, which burnt billions of investor money. What was leading to this euphoria? I mean, you've lived through it. I think you might have an interesting take.
So effectively, it is if you look at the AI scene a little bit like now, Okay, it was somewhat similar at that time. AI is being backed up, of course, by solid revenues now coming into companies. The internet at that time was on belief and hope, as many bubbles are. But that's how you get the good outcomes eventually from every bubble. Now, at that time, the metric really was traffic. NASDAQ was the place where companies were getting listed. So there was a lot of capital available to companies. Sify paid me or paid 115 million for IndiaWorld. That same night, their NASDAQ listed stock went up by $700 million.
Oh my God. Incredible. Okay.
In the 2 months after the IndiaWorld deal, Sify's valuation went up from about $1 billion to nearly about 7 or 8 or close to probably $10 billion. Secondary to raise money to pay me. So it was future money. So they effectively diluted probably 1 or 2%. Now, people think they paid a lot, but look at what the markets were willing to fund at that time.
Yeah, it was a extremely good deal for them, right? I mean, pay 100 million and get a couple of billion bump in valuation.
Yeah, and also, I have to say this quote by Hemendra Kothari, who was the head of DSP Merrill Lynch. And I went to him, they were my advisors. I remember talking to him saying that, Hemendra bhai, look, my wife and I have built this company for 5 years. We don't want to sell it. This is like our life. And he said, Rajesh, more important than knowing when to enter a business is knowing when to exit a business. He said, you will never get this kind of valuation again. You are a creator, you have ideas, you have imagination, build some new things in life. This money will give you the freedom to do what you want in life.
And this was an all cash deal.
Yeah, it was started as an all cash deal, but later as the markets fell, Sify converted a part of it into stock. So I got some stock later on, but it was largely an all cash deal.
Amazing. When did the markets turn? Like how much time after the deal closed?
Very quickly. So my deal happened in November 1999. I think Sify, I think the peak was February, March of 2000, if I'm not mistaken. And that's also when the AOL and Time Warner deal happened. And I know my second tranche got paid in June 2000. And by that time, the markets had started falling fairly steeply. The correction had already started happening. So it was that small window which was there.
Yes, amazing. You couldn't have timed it better.
Yeah, if I had missed that window, Akshay, I mean, you think about it, we were a 3 crore revenue company. And we got a deal which was 499 crores, 166 times revenue.
Wow.
I think it would have been very difficult to get even probably a fraction of that amount at that time. So that's the story of the IndiaWorld deal. Yeah.
Amazing. So why didn't you become a VC after that? A lot of people in your position might have thought that, okay, let me invest in startups, etc., etc. Like maybe it was not a done thing then, or what? Like, I'm curious.
Actually, in early 2000s, there was not much of VC yet in India. I mean, there were a few global funds. I don't think there were too many Indian funds at that time. And I did try investing in companies a few years later, 2007, 8, 9, in about 15 odd startups. But then I realized that I am not the VC types. I am the entrepreneur. For me, the thrill and joy of building things from scratch, solving problems, irrespective of the outcome. I mean, I've probably failed 40 times in my life trying to solve different things in life. But then I realized I'm not the investor types. Even now, I don't do direct investing in startups. It's just a single company. But I love doing different ideas, experiments forever in Netcore, which is what I'm involved in now.
How did Netcore start?
So Netcore started, the interesting story to it, just around the time I was selling IndiaWorld. We had this small side business in IndiaWorld, in the company, where we were setting up Linux mail servers for companies. How that started was, again, listening to customers. When we started putting up websites, they started getting emails from NRIs. And they said, look, we need to now route these mails internally. We need email IDs. And Microsoft Exchange was the only option at that time and very expensive, of course. So we started setting up Linux-based mail servers for companies, open source mail servers for companies. But then when I tried to raise money in IndiaWorld at that time, I would get this question, okay, so you got this portals business and you got this site tech business. This is too confusing. I would then end up getting defensive very early on in the conversation. So then I decided, okay, maybe best to separate the Linux business out. No one was interested in it anyways. And that then became the genesis for Netcore after I'd sold IndiaWorld.
So, like Netcore today is a lot more than a company setting up mail servers. Take me through that evolution.
Sure. So, for the first 7 or 8 years after I sold IndiaWorld, about 2006 or so, we were only doing mail servers. And I tried a lot of different ideas in there.
This mail server, I just want to quickly explain. So, this would, like, people who had Microsoft Outlook software on their desktop, so they would configure Outlook so that the mails hit on their Outlook software.
So internal corporate mail. So at your domain, you get a mail ID, and then the mails would come to your mail server and then get routed to mailboxes. So Linux had an equivalent to Microsoft Exchange on the mail server side. And so we would start deploying that commercially for companies. So that's how we started getting some money.
There was no UX layer in this, like an inbox where you log in.
Yeah, the UX could be your same Windows. Windows, I think, had Outlook. So you could use it with the mail server, absolutely. So what Microsoft would charge is for the server licenses.
Okay. So
the first 7 odd years, Netcore just did not grow. We tried many different things, thin client, thick server. I'd also invested in a company where we tried to build a $100 computer with IIT Madras. So lots of these ideas. And of course, none of them really worked out. And then in 2000...
Why didn't they work? Is there some through line?
I think if I were to paraphrase it in a book title which came out a few years ago, essentially, I was focused on the solution and not the problem. When I look back, every time that I've been enamored and excited by the tech side of it, and tried to create tech in search of a solution, I failed. Image Workbench was enamored by the tech, trying to find an outcome. A lot of these products, and we tried to create a single small business server for small businesses for small businesses at time called Pragati. Lots of these things. 2007, I think, failed. And then a friend of mine sat me down one day saying, Rajesh, look, you're good at coming up with ideas. You're completely lousy at trying to commercialize any of them. You need to get a CEO for your business who thinks very differently from you. And he had a recommendation of a person I should at least meet. The first idea shocked me. I thought I had this history of one of a big success behind me, of course, long time ago, days passing by. And then, but I did meet the person he recommended, Abhijit Saxena, and we hit it off quite well. I realized he's very different from me. And what we needed at that time was a way to take some of these ideas to commercialization. We need a business sense. So 2000, the story is great success in 99. Next 7-8 years, I failed at everything I tried. So I was 2007, 6, 7, I was probably a 1 or 2 crore revenue company. But then we did start spotting new avenues at that time. So that's where the Netcore growth story begins, with a new CEO. I was involved in the company, of course, but I was very clear that the decision maker is only one. You can't have 2 co-leaders. I keep telling people, I said, companies are not democracies. Think of them more like North Korea or China. To have one leader, but authoritarian, basically.
Okay.
Decision maker. So that's where then we started with enterprise SMS services and enterprise email services. Now, these were different from the mail server. Because we had the mail server, now companies like India Today, others used to collect email IDs, subscriptions, etc. They said, look, we want to send out newsletters of our own. And there was no easy way to do that. So then we created a simple solution. At that time, we called it EMM. So email mass mailing. So they could then send out emails at bulk without crowding their own internal server, which was used for their enterprise traffic.
This was a managed service or a product?
We didn't know at that time, but these were all operated from the cloud. We didn't know the word cloud at that time. They were all operated from a server on the internet. That's how we would call it. So, but it was basically the early days of the SaaS world. So they were all operated as services where we would charge not on a maintenance fee, but we would charge per email which was being sent or per SMS which was being sent. So these then became sort of the monthly recurring revenue businesses, MR type services. So email and SMS, we still do both of them now. They are great revenue generators and profit generators for us.
How did the idea for SMS come? Again, from customer needs. Like you started with email, mass mail, and then
SMS is very interesting. Actually, email started more from the customer need. SMS was growing in India at that time. So we created a service called My Today SMS, which was actually a consumer service. So we told people that you send a message, start news or start cricket, and we would send you an SMS, 160 characters with updates. At that time, SMS cost was very tiny, and we also set up our own SMS server at one of the telcos. So it was a fraction of a paise at that time to send an SMS. For a telco, it's basically zero cost, literally, or zero incremental investment. And I thought I could replicate the IndiaWorld type model of running an ad and then making revenue from attention. So the service grew virally. So in less than a year, I had 4 million subscribers to these SMS services. And we had 30 channels. So news, cricket, jokes, shairi, Gita, Bible, all kinds of things.
Was this the time when those 4-5 digit there was some 4444, you send a message there and these would typically be like, this was like the vast era of telecom value added services. There was some premium pricing you would pay, and that's how the people who are sending the content, who are running the pipes, would earn through that.
But there was a difference here. People only had to send us a message once, start and or stop for unsubscribing. So they would only pay the premium pricing once. After that, we were sending it to them for free, hoping to make money from the ad. But then what happened was, two things happened. One is some of the telcos started realizing that this was competing with their vast services. So they started blocking our access to the short codes. And we had to use what were called long codes, 10-digit codes at that time. But more devastatingly, the government then effectively they increased the SMS pricing for businesses literally overnight from a fraction of a paise to 10 paise. So I was sending out 1 crore SMSs every day for these subscriptions that we had. Now the problem became that what would have actually be 1 lakh rupees a day now became 10 lakh rupees a day, and I had to stop overnight. And that is a big learning I learned in my life, that never build a business where you can be shut down by the government by a regulation change overnight. I mean, it was, when you spend a year and a half building out, you have people just spreading every day new subscriptions on their own. Our most popular subscription was actually Bible. You send out a Bible every morning at 5:30. It spread through churches. I mean, you can imagine in churches, people saying, okay, remove your phones, send a message, start Bible, God will speak to you every morning at 5:30. Almost exactly like that.
Like true virality it achieved.
True virality, absolutely. So for me, both IndiaWorld and My Today SMS at that time were virality, were actually word of mouth, focused on the product. And once we stopped that, I realized, what I had to do something else. We had this SMS infra, etc. We had expertise, and then we started looking at a few companies already started looking at corporate services. Corporates wanted to send out these messages, so we repackaged, or we focused our consumer platform for corporates. So that's how the SMS businesses started. No, it's very interesting when you ask the stories. It's never a linear. For entrepreneurs, it's never a linear path. It's not like I sat down one day, built a business plan, I'm going to create this thing. No, it's always some listening to customers, some problems. And I keep thinking many times in life, if my image workbench product had worked, okay, if I'd got like 10 orders for those imaging platforms, I would never have done IndiaWorld.
If you hadn't lost the domain, you wouldn't have created all of those.
Absolutely,
Yeah.
all the others, absolutely.
Yeah. It's the constraints which define our journey at the end of the day. Yeah. That era was pretty interesting on the VAS side, right? There were a lot of people making a lot of money on VAS, which was generally a rev share with the telcos. Why didn't you explore that?
Well, telcos would pay very little.
Okay.
That was one. And I was probably more fascinated with the IndiaWorld model that advertising could actually work. So, and we had started to get a few ads at that time. So the 160 characters would get split into 80 characters content, 80 characters ads. And my belief was that every company would have to build hotlines, broadcast hotlines on SMS with their customers, and the opt-in would be the great way to do. And we could do all of this bypassing the operator. I think in hindsight, that was also a mistake, because this was a proprietary, in a way, operators controlled the platform. It was not an open platform like the internet.
Although WhatsApp is enabling this today, right?
Yeah, but WhatsApp goes over on the data, so it's over the top, as it were, the way it's working. Yeah. So WhatsApp did a phenomenal job. I wish I had thought of that. It's one of those ideas. I think we were close. We wanted to do these SMS groups. I think I was too caught up with this whole SMS thinking. Think of the data side of it and an app side of it. So maybe, in a different universe, I would have done something like that.
Yeah. Okay. Interesting. And what kind of revenue started happening through the EMM service, the SMS service? Like by 2010 or so, what kind of revenue were you doing?
It was a few crores. I don't remember the exact numbers now, but the revenues were starting to grow quite rapidly, and so was profitability. So these were very profitable services. In email, gross margins would run at 80 to 90% because all you had was data center costs. SMS, once you had the platform ready, of course you had to pay for the SMS capacity, so the margins were typically not more than 25%. But at scale, you could actually do quite well. You could do very well. So both those businesses started working well. We were doing, I think, a few crores, probably about 5-10 crores at that time, by 2010, 2012 or so. But we were profitable, most important.
And these were transactional messaging or promotional messaging?
Mix of both.
Okay.
Yeah. So it was a mix of both transactional, promotional messages. In email, a lot more promotional. SMS costs had started rising, but email costs, of course, for the last, I think, 20 years have stayed at roughly in the 1 paise range.
Right. Yeah.
So that worked out very well. Then, of course, all the other problems started coming in: SMS spam. Then you had, of course, WhatsApp. Then you had all the other telco restrictions, all the restrictions of the government which came in. So the industries have evolved. But the good news is, even today, when you look back, and considering that we started all this in 2006, 7, 8, about 20 years ago, these are still very, very good businesses to run. Email, we have, while we are big in India, we've got a small footprint globally. Email today is probably a $7-8 billion market globally for the transactional and marketing messages. And we do about 35 billion emails a month globally. So almost 1 billion emails every day. And SMSs in India, of course, have grown tremendously. You have RCS now, you have WhatsApp also. So the power of all of this is because of one simple idea, which is push messaging. When a brand has a customer, how does a brand get a customer back to its properties? Either you remember, so it's phenomenal branding, but otherwise you need the push messages. And there are a handful of channels for push. Email is there, SMS is there, RCS is there, WhatsApp is there. WhatsApp is of course a lot more expensive. And if the app is installed, it's app notifications. For every brand, the power of push messaging is required to bring people back to their properties, because that's where the transactions happen. So I don't think push will disappear. The channels will keep evolving, channels will change and have changed to a certain extent. But these are very solid revenue generating, profit generating businesses globally.
When did that evolution happen from CPaaS to MarTech? And let me just break this down for our listeners. So CPaaS is communications platform as a service. So like a Twilio, SendGrid, these are CPaaS companies which are providing the pipes through which brands can send out emails and messages to customers. MarTech is more like, say, CleverTap, MoEngage, these kind of businesses where the problem they're solving is what you just described: how to retain customers, how to reduce churn, how to get repeat, how to increase the lifetime value of a customer that you have already acquired. So when did that pivot happen from Netcore being CPaaS to Netcore being MarTech?
So 2014, and I just finished off about 3-4 years working on the political side.
That's which we'll come to next. That's another chapter I want to get into.
2014, effectively, I was thinking of what to do next, and a colleague of mine, Veer, he came up and said, Rajesh, I was meeting a customer, and then she mentioned this word MarTech. And then I tried to understand a little bit more, and I looked it up. This is the next big thing. So we are doing the channels. What MarTech lets you do is to orchestrate all these journeys, creation of segments. So you can automate a lot of these sending of messages. And August of 2014, there was a first MarTech conference in the US, which both Veer and I went to. It was organized by Scott Brinker. And that's where the genesis of the fact that MarTech is something which can become the next layer on top. Because we were always worried. Every time we would go, what if SMS goes away? What if email goes away?
And especially you would have seen the WhatsApp kind of apps. Like today, for consumer to consumer communication, nobody uses SMS, right? So that would have you would have seen that change happening.
No, WhatsApp started coming a lot later.
Okay.
This is 2014-15. So I think it was very early days even for WhatsApp, if I'm not mistaken.
Okay.
I mean, Meta for Facebook, of course, was the big thing at that time. And then we started, once we came back, then Veer actually led the creation of the MarTech platform. And that began Netcore's journey into marketing automation. So for us, it was that you had the communications layer. Of course, you have the data storage, which is happening. So there's the data layer, there's the communications layer, and then there's the journey orchestration layer, the automation layer. You could create segments, you could create segments based on people's interests, demographics, actions, behavior. And then you could not just broadcast to them, but you could also create journeys based on triggers. So I left an item in the shopping cart. If I have not completed the purchase, then automatically, say in 3 hours or 3 days, a journey can be triggered to send me a specific message. We all are recipients of these messages, but this is the back end of how all these things work. That's the world of marketing automation.
What are the different stacks within MarTech? So one is, of course, the communication layer, which you explained. So by data layer, you're talking of like the CRM or the CDP?
Yes, absolutely right. So it's the CDP.
So CDP, for my listeners, is customer data platform. How is CDP different from CRM, if you could just explain?
CRM is the category. It's a customer relationship management category. So MarTech, web personalization, app personalization, all of this broadly comes under the CRM category. So if I just back up a little bit, if you think about marketing, digital marketing. It's essentially just two elements. It's about acquiring customers, which is largely done through the AdTech platforms. So Google, Meta, the ads that you see all over the internet, that's acquisition. Now, once a brand acquires a customer, acquires here would mean getting some sort of digital identity, either an email ID, a phone number, or an app install, in which case you have a direct relationship via the app. That is where the world of CRM and MarTech comes in. So what you're doing there is building relationships with existing customers. And of course, to build relationships, you have to have some identity information. So this is the retention side of it. So I get the acquisition done. I'm paying money to AdTech platforms to get a person in, and then I have to maximize my lifetime value of that customer. And that is where the combination of push messages. So you have that, the stack is you have the CDP, which is the data stack. Then you have the orchestration stack, which is the marketing automation part comes in. So you have the journeys, the segmentation happening there. Then you have a personalization layer. So how can I, when you come on the site, if I know who you are, I can actually show you the right message so that you are more likely to do a transaction. So that's where the personalization piece starts to come in. The more the data, the better the personalization. Then you also have something called product experience, which are nudges. Everyone would have seen those inside apps where a spotlight comes on a specific action the brand wants you to actually look at. So for example, in KYC, you have to complete the KYC process. You have to put some small money in there. So will nudge you in that direction. So a lot of these now become elements in the broader CRM play. So there's one CRM, which is the B2B side. What I'm describing is the B2C side. B2B side, of course, you have the likes of HubSpot, Salesforce. Salesforce is everywhere. But Salesforce's original thing was on the B2B customer relationship management, where brands, essentially the salespeople are handling the marketing relationships for their points of contact at brands, the buyer side. But this is the B2C side, which is somewhat different and much more exciting because you're dealing with millions of customers at any point of time. How do you personalize messages? How do you break them up into segments and so on? So the goal in marketing, in fact, I think is very simple. How do I reduce, as a marketer, how can I reduce my acquisition cost, which is called CAC, customer acquisition cost, and how do I maximize the lifetime value, LTV, of every customer? But that is really the spread, which is the most critical element which drives profitability for any B2C brand on the digital side. All other costs are impossible to control. It's how much you're spending on marketing decides how profitable you are. Where the repeat behavior comes in, maximizing lifetime value comes in, all of those elements start to play up there.
Okay. So the reducing CAC part, how does like a MarTech stack help in that? I think CAC is a function of, like, say, running ads on Meta, Google, etc., and then optimizing those ads, or what else is there for?
Yeah, so this is my pet peeve in the world. So that what's really happening is that brands spend a lot of money on acquiring customers, but they don't spend enough on building the relationships with them after they are acquired.
Right, the LTV, basically, they don't spend enough on increasing the LTV. Okay.
So what's happening here? What the outcome of all of this is that the customer who is there becomes inactive, dormant, and churns. The relationship is not being built by the brand. All we are getting are effectively offers, buy this, buy that, 10% off, 20% off. In many cases, the messages are not even relevant for us, not even personalized to us. So now if you put all of this together, what's happening today, and this has sort of changed, of course, through the years, 90% of marketing budgets are spent on acquisition, 10% on retention, and 70 of the 90 is actually spent reacquiring the same customer again and again and again because brands are not building deep relationships. And for me, this 70 is actually ad waste. So, of the ad industry's digital advertising $700 billion, my estimate is that $500 billion is being wasted. This is money which should actually be on the P&Ls of brands, which is on the P&Ls of the ad tech firms.
I should point out here, there is a vested interest that you have here in this calculation, because Netcore is serving the LTV increase.
Absolutely. Netcore is
Part.
completely on the CPaaS, MarTech side, and of course, product
The
discovery.
LTV boosting side of the business.
LTV boosters in the business.
Uh,
I'll be happy, by the way, if it becomes more 50-50. It's today 90-10.
right. Okay. Okay, that's interesting. I did not know that it was so skewed. Is this just lazy marketers?
So, if you think about MarTech, and this is, I'm going to quote back what marketers have told me. MarTech is hard work. You have to collect data from customers. You have to collect digital identities, email, mobile number. You have to then create campaigns literally on a daily basis. Then you go to execute the campaigns. Then you have to analyze what has happened on the campaigns, redo the whole content creation process. This is, in their words, drudgery. On the other side, now compare the world of AdTech. You call up an agency, here's my budget, here are the clicks I need, deliver those to me. Very simple. This is becoming even simpler now, where Google and Meta are actually doing even the content creation for you. AI is helping create the content, doing all the A/B testing at scale, massive scale, beyond what humans will ever be able to do. So give us the budget, tell us what you need, we will deliver it everything, and you just sit back and relax.
So there's that dopamine hit of like you turn on the tap of your putting your card in and you start seeing revenue.
Absolutely. AdTech delivers revenue from the next second onwards. Tech is a slow process. You have to build relationships. Outcomes take a fair amount of time.
You have to set your organization up from an infrastructure perspective, from a data collection perspective, in order to make it work.
Absolutely. And the challenge also is that in many of these cases, CEOs want growth right away. So for a marketer, profitability is then not the question. You want growth, I'll deliver the growth. The easiest way to get growth is just increasing the budgets spent on the AdTech platforms. Now, what I tell marketers is that, look, this is like you're paying a tax on every transaction. You're literally paying a 20-25% tax to the AdTech platforms on every transaction. Doing it once is fine, but doing it repeatedly will not help you on the path to profitability. The marketer's response, but I'm not tasked with profitability. My goal is growth, and this is what I deliver.
So, what size of business should start thinking about MarTech? Because it is not cheap. You need, at the very least, you need somebody who understands it, and that talent cannot be cheap. I'm sure this would be like a 30-40 lakh annual salary kind of a resource at the very least that you would need. So what size of businesses does this make sense for, like, to invest in MarTech?
I think if you have, there are two challenges. For any startup, you will need some element of a MarTech play. Because it's a given. I mean, you may still do just broadcast campaigns. You may not do that.
That could be as simple as MailChimp, where you
start with MailChimp or a SendGrid's marketing platform, so you can get going. They'll cost you maybe tens of dollars up to $100 a month. So it's not a very large outlay in the beginning. But what you said is correct, that you need at least one resource to get this thing going. But as the business starts growing, say beyond a crore a month for a D2C business, then what happens is you have to remember that now you're competing for your customers in an auction against every other D2C brand to get them onto your platform. So the way I like to phrase it is, think of two nevers. How do you never lose customers, and how do you never pay twice? What the never lose customers means is what we talked earlier. How do you maximize the lifetime value of every customer who's coming in? That means when I get a relationship going with a customer, can I ask that customer a few questions? Can I get to know that customer a little better? Male, female, where they are, where they stay, what are their interests? If in travel, do they like hills or do they like the beaches? Ask these questions. Very few brands actually ask us this. They're not building the hotlines with us.
But there's friction in that, right? Like you want to give that dopamine hit to your customer also, right? That I just go to Amazon and I click buy and the product next day reaches, or what, like in quick commerce, that dopamine hit is even more instantaneous.
Yeah, but how is the customer coming to your property? See, now there are only, if you think back, either you're on marketplaces, where again you're paying a tax to the marketplaces for your transaction, or you're paying them in from AdTech, where again you're paying a tax. So the best D2C businesses are the ones who have very high retention rates. Recurring revenue is very, very important.
Right. That LTV over CAC is how any VC evaluates D2C businesses.
Absolutely.
Right.
So over time, my belief is that the importance of MarTech, and especially now with AI, where a lot of the frictions, so the frictions I spoke about earlier are all going to go away in the coming months with the use of agents, AI agents. So you'll have segmentation agent, content agents, decisioning agents, what to send to whom at what time. Actually, the messaging is very simple. What's the next best offer? So right message, right person, right time, right channel. All of these core ideas have not changed. In fact, 30 years ago, there was a book which came out, The One-to-One Future, which talked of one-to-one personalization. I think finally now we can see that future coming up, that marketers now should be able to spend more on the retention side of things. And when I talk to marketers, I keep saying, I said, very few marketers, CMOs actually become CEOs. This is your moment in time. If you can think of yourself as the chief AI officer and the chief profitability officer of the company, you can become the next CEO of the business, because you're the custodian of the customer anyways. But today you are seen as more of a cost center rather than a profit center. Become the profit driver of the company. And now you can make that leap to the corner office.
For SMEs, will this happen? What you're saying of an agentic MarTech stack, or is this more of an enterprise product?
No, I think it will start with the enterprise side because of the AI tech which has to get done. But eventually it will flow down, absolutely. In fact, today if you look, you can run an entire acquisition side, the AdTech side of it, with effectively one person. You set up your parameters on the AdTech platforms and you're done. MarTech will be similar, where effectively the way I think of it is that you'll have a co-marketer helping the marketer. And the co-marketer, it's a Netcore term that we use. The co-marketer works with multiple agents, so that you are not just giving inputs, but you're telling the goals. I want my sales on Rakhi or Valentine's Day or Mother's Day to go up this much. Who are the best customers to target? And AI is the agentic side of it is already doing actually a much better job on the decisioning side than what humans ever can. So in a way, what's very interesting is when I talk to marketers about AI, I said, look, there are two sides of it. There's the faster, better, cheaper, where you can automate some of the easy functions which are there in your marketing team. So content creation, copywriting, all of those things. But take up the impossible things. Let's say you have 1 million customers. Now, how many segments will you create? If there was humans managing this, you'll create 10 segments. But you probably need 100 segments. And every segment then needs its own content. This is where the agentic layer will come in. And I genuinely believe that in the next year, we will be the beneficiaries as consumers, as customers, because we will get relevant messages coming to us. And that will help the brand, because then we are not going shopping around all the time. We are not switching ourselves off from brands, which again forces them back into the world of AdTech, which leaves more money with brands for them to do product innovation. If EBITDA goes up 5 5 to 10 percentage points more, that's money which stays with the brand rather than going into ad waste.
Okay. What is the tooling needed to make this work? Like, for example, you said it all starts with data to understand your customer. For example, like if I'm on Zomato, do I generally order vegetarian or do I generally order non-vegetarian or whatever, pizza versus biryani? How is this all of this data captured and stored, and is Netcore providing a product to do this, or do you integrate with other products and capture, or like how does that happen, the tooling?
So this is exactly what MarTech platforms do. So what happens in the app is there is a piece of code, what we call the SDK, which essentially gets into the app, and that then captures all the data and all the actions that you are doing, which gets stored along with your demographic data and other data that you may be giving through forms and so on, which gets combined to it. On the website, similarly, there's a JavaScript, a small piece of code on the website which captures all your actions. So what's happening is the CDP at the back end actually not only has your sort of static information, but it's also got your your behavioral data. Now, if you take this little further, imagine now the future systems actually can create twins of each one of us. They know where we stay, they know the weather. So they can in fact even target messaging to us based on time of day, on the weather outside, raining, not raining, Bangalore versus Mumbai, different messaging can be done. But this is beyond the capacity of humans to do it. And this is where I believe the future of MarTech lies in these AI twins, where each one of us as consumers will have an AI twin. I call them brand twins because they're in a way controlled by the brand. It's not us. It's not like an agent on our side of it. But that twin becomes the interface between the brand and us. It knows about us. We can talk to it in natural language. Today on most sites, you can't still type. You can speak, but you still can't do it you still are doing keywords in most cases. I still can't say, hey, I'm in the mood for a legal thriller for 2 hours. I don't want to watch, don't give me a long series. Ideally, I want a legal thriller set in India. Now, what are my options? You know what I watched in the past. Don't give me those options.
Right. Yeah, you cannot do this as of date.
You can actually do some of this on a chat GPT or a Claude.
Yes.
And they'll give you better recommendations sometimes than what a Netflix or an Amazon Prime does.
True.
But this is where the opportunity is, I think. So this is the future, I think. And my belief is that the better the recommendations are, the better the relationship building is, the better the relevant content that they can give us, the brands can give us, the less we will be prone to moving away to others, and the less they will then be spending to bring us back to their properties. So I think this is the inflection point really in the world of marketing. For most marketing is now digital, that the brands who execute this well, I think we'll see a disproportionate increase in their profitability and their retention rates, which earlier it was sort of a level playing field for everyone. And therefore, the more data that you collect, the more you are profitable, and all the investments that you can make on new products, etc., start to happen. And this is where the marketer becomes critical.
So a customer of Netcore does not need anything else. You provide the CDP. There is a CDP product of Netcore. There is a orchestration product of Netcore. These have different names or what? Like internally, can you tell me what are the product offerings?
Effectively, it's all seen as we call it CEE, Customer Engagement and Experience Platform. In that, there could be separate modules, say for app personalization, web personalization. So all it's the core idea is simple. It's basically journeys, segments, the CDP. So most MarTech platforms have a basic CDP already in place. The challenge happens when you have offline stores also, in which case you got to these, then they become siloed because you typically will have a separate system for an offline system, offline stores, and therefore you got to then integrate the data together. You got to match that these are two of the same customers. So that becomes a little more complex. But for pure, say, D2C brands, MarTech companies will provide the full stack. The one additional piece which we have added, which we did it through an acquisition 4 years ago, Unboxed, is which enables product discovery. So when you search on, say, e-commerce websites, how to make the search results relevant, how to make the browse pages relevant, how to do better recommendations. That is where a search and product discovery platform comes in. So broadly, if you see the layers are, there's the communications layer, which we discussed earlier, the CPaaS layer, email, WhatsApp, SMS, RCS, notifications. Then you have the MarTech layer, marketing automation, journey orchestration. And then you have the search and product discovery layer, which is more relevant for B2C type companies, e-com and retail companies, rather than the BFSI segment. For us, the two large categories, of course, are BFSI, banking, financial services, and insurance. And then you have the e-com. They are the two entities with the largest bases. Then you have, of course, telecom, travel, all those companies start to come in. The key thing is, we need, for companies like ours to work, we need an identity. So FMCG type companies who do not have identity information because they are operating through distributors, they don't become large customers of ours, of MarTech. They will do it for their B2B base, the distributors, the wholesalers and the retailers which are there. But for us, we need the end customer identity information.
Okay, got it. Okay. How are you different from a CleverTap? And why I'm asking is because I've interviewed the CleverTap founder previously. Interestingly, they also came from a media company. They were in Network 18 before they started CleverTap. So some parallels there. But help me understand, is it very, very similar to what they offer, or are there some fundamental differences?
So the MarTech layer that I spoke about is identical to, say, a CleverTap, MoEngage, WebEngage, globally companies like Braze and Klaviyo and so on. Where Netcore focus really has been is to integrate the other two elements also into a single stack. So the data flow becomes easier. So we also control our own channels. So email, SMS, we have direct telco relationships. We are our own email service provider. So which then enables a lot of interesting things, send time optimization, how do you get better primary inboxing happening, and so on. Which is, because other MarTech players have to rely on third-party platforms. And then, of course, when we can bring in the search and product discovery, it helps with recommendations. So our belief is that the customer is the same. They are coming at you from multiple different angles. Every direction, that every channel that they come in from is a data channel and a action channel. So you're collecting data, you have to get it all in one place, and then in that split second, what is the best action? What is the best offer that I can give to a customer? The greater the control that you have across the stack, the better can be the recommendations and the messaging that can be done. That's really where we stand out.
Okay. Understood. Okay. You, I believe, spent almost $100 million on the Unboxed acquisition?
Yes. About 100 million, about 4 years ago, yes.
Okay. Can you help me understand? You must have rationalized it internally to the board that this is why this investment is worth it. This is how it's going to boost our revenue or whatever. Just if you can help me understand.
So Unboxed basically had two advantages. Number one is that it was an adjacent product. So basically it did search, product discovery, like I explained just now. So it effectively leverages the relationship with the same brand, the same customer, our customer, not the end, our client as it were, not the end customer. Number one. So that we realized that could be a good add-on product to be able to sell into the same buying center. And the second was that a lot of Unboxed customers were in US and a few in Europe. Now we have been trying to also get into these markets for a long time because they are much bigger markets than India. US, I would say, is overall for the spaces that we have discussed is probably 50 times bigger. Europe would be at least 10, 20 times larger. And in US, Europe, the developed markets, it is very hard to build organically. To build a presence organically requires either a ton of money, you're spending on marketing, etc. Or a good way is to look at an acquisition. You get a footprint, you get some brand recognition because Unboxed had been at had been around for a long time, a few years. At events, people knew them, and so on. So you could then build on that. They are the Gartner-Forrester relationships also, which are very important for enterprise buyers. And that is where, for us, that was the rationale for the acquisition. That you get a adjacent play, plus you get a starting footprint, a better starting footprint, and you save time for the developed markets.
Okay, so like new customers plus increase in your average contract values because you're selling an additional product. How much has it contributed revenue wise? Like, what's been the lift?
So Unboxed is roughly about, uh, uh, I'd say about 12-13% of our revenue today. So that's a significant contribution. More importantly, it's very high quality revenue because it comes from developed markets. We've also been successful in taking Unboxed to some of our customers. So Netcore has a large footprint across India, Southeast Asia, GCC, Africa, Latin America. So we've also been successful in cross-selling from our purposes. But for us, that was the third objective, that we can actually also get more business. But the first two actually have worked out quite well for some very good brands in the US. Perhaps where we have not been as successful is in doing more of the cross-sell of the Netcore products into Unboxed customers. Because we realized later that the buying center is slightly different. They're both under typically the marketer or the product person, but Unboxed sells more to merchandisers, Netcore sells more to the CRM teams. But eventually now what we are seeing is more and more brands now in the US want fewer vendors to deal with. So that is helping us a lot now. Otherwise, it's a data play. You don't want your data siloed. The more the data is together, that is where the real magic of AI starts to work. It's less friction dealing with many different providers. So in a way, when Netcore and Unboxed come together, we can replace 4 different entities with just us. And that is helping us a lot now, especially in RFPs now for the larger enterprises in the US.
Okay. How are you doing the cultural integration? Unboxed is, I'm assuming, a US incorporated business versus Netcore, Indian incorporated business, and that too a bootstrap business, no influence of VCs. So how does that cultural integration work? How do you make the merger successful?
Actually, it was very easy because Unboxed's almost entire team was in Bangalore. So the India, so it was a good example of an Indian company. One of the co-founders was in the US, Pawan. We are a small sales team in the US, and we are organized very much similar. So we got a large footprint in Bangalore. So that worked out quite well actually, and so integration was much easier. So we actually bought a India incorporated company with a significant US presence. So it was quite smooth.
And this was a cash acquisition, or they also have equity in Netcore?
It was largely cash, primarily all cash.
So how Netcore had enough, like 100 million worth of surpluses in the bank?
We had saved up a lot of money.
Wow, incredible.
So just for a small plug, both IndiaWorld and Netcore are what I call Proficons. This is the book I wrote 3 years ago. So a Proficon is a company which is a startup, which is private, which is bootstrapped, which is profitable and scaled. So the other way to frame it, as a friend of mine put it recently, is that many businesses are funded by venture capitalists, VCs or PEs. Netcore is funded by its customers.
Yes, true. But I mean, you spent 27 years, so somewhere there is a trade-off. Like CleverTap is also about 100 million ARR. You're, I believe, also about 100 million revenue. They did it much faster because of that VC money, right? So there is a trade-off, right? Like as an entrepreneur, you may not have the patience to spend a decade and a half building something. That is, I mean, that's also a consideration.
Yeah, so there are 2 trade-offs. You've described one of the trade-off, which is of course speed. In terms of money gets you speed, you compress time. The second trade-off also is in ownership.
Yeah.
In most, so when I used to talk about the Proficon, I would say that for a unicorn, you need to get to $1 billion valuation for the founders to make maybe $100 million. In a Proficon, assuming you own much of the company or the founding team owns much of the company, you need to just get to 100 million in valuation.
Yeah. True.
So
True.
there are trade-offs, absolutely correct. But when I look back, Akshay, what I like is the fact that and when I see many VC invested companies, especially in times like these, where SaaS is under a lot of pressure, valuations are falling, at least in the SaaS space. We have freedom. We have decision-making freedom. There is, I'd said this when I mentioned this on my blog. During times of crises, I was writing about COVID. Unicorns fire, Proficons hire.
Right.
There's a lot of pressure to, you got to cut cost 20% or just fire 20%. And then effectively the founders are working for the investors. If you've done 3 or 4 rounds of capital raising, the founding team has not more than 20-25% left. The destiny of the company is in the hands of investors. So it's a trade-off, absolutely agreed, depends on what the long-term sort of mission is. I've of course sold a company once, so I've been on the other side of it. Here, my hope is that Netcore can become, in the words of Jim Collins, an enduring great company, a built to last company. So that's what I want. But it's been a slower journey. I fully agree with you.
Are you planning more acquisitions?
We have done a few smaller ones prior to Unboxed also. See, the challenge what I've seen now, we've seen in acquisitions, is that the next acquisition we'll have to do, because we don't have a valuation set on us, has to be all cash. Number one. Unless we raise capital or whatever, number one. So that limits, and Unboxed was a reasonably large sized deal in that context. The second is that with AI now coming into play, into the mix, one has to be very clear of what is the value that you're going to get from the acquisition. Because there are verticals being disrupted dramatically. And from a coding perspective, today, coding can be done fairly quickly, especially for new products, in weeks, rather than say months to the extent of a year or so. At the same time, what I also think is that is our space so crowded that I have to now look at adjacencies. Now, my belief is that MarTech actually has looked at the world wrong. See, we have looked at selling entirely based on inputs, number of messages, monthly active or monthly transacting customers, entirely based on inputs. And that in itself has constrained the size of the MarTech industry. I think the shift that MarTech needs to make is to effectively go to outcome-based pricing. So we are actually selling Ferraris, but the operator on the other side is like a taxi driver. Complex systems. But the operator there is a person, like you said earlier, maybe a person with 12, 18 months experience in industry, who is very enamored by the AdTech world because that's where all the money is going. So MarTech is basically a place to spend 18 months, 24 months and then get out from there. Now, if we can shift the focus from just input based to output based, I call it alpha. It's effectively exactly the way hedge funds work. There's the beta, which is the baseline. So if markets, a Sensex gives a 10% return, the base is not 0 but 10%. Alpha is what the hedge fund has to generate over the 10% and then take a percentage, a carry on that. I think that is the future of MarTech. And if we can do that, the TAM, the addressable market, the total addressable market actually is bigger by a factor of 10 or more, because now we can actually deliver value based on percentage of revenue that we are able to generate. For me, this is the most exciting part. I think all the all the elements which are required to do this are there. It requires us to shift our thinking from input based to outcome based pricing. And now with AI, I think it is absolutely the agentic AI. We have built a lot of the agents now, the orchestrator and the specific individual agents. I think we can actually make this thing happen. This is my big focus going forward, because if we do this, we go from the red ocean that is today every MarTech player, every CPaaS player, okay, very competitive markets. You go from there to a blue ocean where you're effectively telling brands there's no competition. I'm on your side of the table. I've got skin in the game to deliver outcomes. So the one phrase I like to use is progency. It's product plus agency combined together. That is what I think the future is. I don't think we need more acquisitions. I think we just need to make this thing happen. I would look at acquisitions more for adding specific product capability where it compresses us time, or maybe geo expansion in specific markets where it's harder for us to build organically.
Is there organizational alignment on this kind of pricing? Because there is a certain inertia. Your sales team would get their incentives based on the average contract value, which they know from day one. It is easy for them to sell that because that's how they have been selling so far. There is a lot more risk in selling outcome-based pricing deals. You don't know whether you'll actually make money on it or not. Even your CEO might have a certain resistance to this. So, is there an organizational resistance to this? And I suspect this outcome-based pricing is more likely to come in through a disruptor, someone new entering the space rather than an incumbent.
Very, very good points. Okay, so how I think we have to look at, so we have to disrupt ourselves. It's very clear. Okay, that's number one. I mean, otherwise someone else is going to do it for us. Better we do it. Number one. Second is, I think it will come in sort of, there are two tracks. So I call it Alpha 1 and Alpha 2. In existing customers, can we go in and link some part of our revenue to outcomes? So maybe it's 70% fixed, and then there's an upside linked with the outcomes that we are able to deliver. So that's track number one. The other way to do this is also there are newer customers who are not existing customers. When we are acquiring, we can go in and can offer alpha as the pricing. Now, to make this happen, there are two teams which need to get aligned. One is the sales team, and the second is the customer success team. Because eventually it's the customer success team, of course, with the help from the product team, which has to deliver. So there's a very interesting idea from Palantir, which I want to just borrow, which I've been telling my team we have to now do.
That forward deployed engineer.
I said customer success teams have to become MarTech growth engineers. They actually understand the business very well. But today they are sitting and analyzing campaigns and giving recommendations which are many times ignored by the end customer. So there's one more framework which I want to just bring in, and this will help give an idea on how I think we can make the inroads with this pricing. So I like to look at that a brand, their customers are what I call best, rest, and next. There are 20% best customers who generate today maybe 60-70% of revenue. There are the next customers who are the ones they are acquiring, the new customers. And then there are the ones in between. The rest customers are drifting or dormant. And they are constantly in flux. Today's best customer could be tomorrow's rest customer. A good place to start for alpha pricing is actually in the middle with the rest customers. These are customers who are drifting, who, if you don't do anything, will end up as a cost center in the next bucket, where they, after say 2 or 3 months, the brand is going to end up spending on AdTech to re-acquire the same customer again. So today, if I can go to a brand and say, give us a percentage of these customers, a portion of these customers. Let us work our magic. We know the industry. We know you are maybe doing 20% of the journeys which need to get done. You are doing segmentation through intuition, through some manual knowledge or whatever manual process you have. We have got the full power of agents. We have the power of of deep industry knowledge. Now, if I can go with such a proposition and say that don't pay me anything, but pay me on outcomes. And these are people who are already leaving you or have gone. They will never give us our best customers upfront. But this middle category, I think, is a great opportunity. I mean, I call it this middle that MarTech has forgotten. In fact, in MarTech, I also use this phrase, sort of that it's anti-MarTech. MarTech has become its own biggest enemy because MarTech's job was actually retention. It is because MarTech has failed that the AdTech business has grown so big. AdTech delivered the customer. MarTech's job should have been to build a lifelong relationship with that customer. But that did not happen. And you're forcing the brand to go back into the world of AdTech. So if we can now, through the mix of, these two models, the agents for automating a lot of the functions and the alpha pricing, I think it can be completely transformative in the era, in the coming era for MarTech.
I mean, like Netflix disrupted Blockbuster. It was not Blockbuster, which should have, they should have done it, but they didn't do it. So there is that little bit of question mark here, but I see the beauty of your approach. The elegance there is that you're not in any way sacrificing existing revenue. The existing revenue is untouched. You're just supplementing existing revenue by saying, okay, these.
I'm risking a small part of the fixed existing revenue. The good news is that there is inefficiency. We know that. The inefficiency in the fact that because MarTech is failing, 70% of our marketing budget is spent reacquiring the same customer again and again. This is fact. So for me, I'm not asking for an additional outlay. In fact, I'm coming in and saying, let me help make this more efficient. And I also know that if I don't do it, someone else is going to do it. My advantage today is that I have deep customer relationships in thousands of customers already. For a startup, they have to go in and build these relationships of trust and access.
Right. Yeah, there is a data access moat that you have. True. Okay, I see your point. Yeah. Help me understand how Netcore acquires customers. How are there any lessons you'd like to share on B2B sales, acquiring these large enterprise customers? How does that happen?
Okay, so we do it pretty much how everyone else does it. But I want to change that also. So I'm like Netcore's internal disruptor, by the
way. Okay, that's a good role to have. Yeah.
I'm no one reporting to me. I run sort of small experiments internally. It's the best thing I like. Small or mini startups. Most of them fail, but gives me ability to experiment. So the standard acquisition, I think there are sort of, I would say broadly, 3 methods that we are using to acquire customers. One is, of course, marketing at events and LinkedIn and all of those things, which basically bring in some traffic. Not very different from the way the world of AdTech also works today. The second is the inbound, which happens organically. Okay, so through a mix of write-ups, webinars, I write every day on my blog on new ideas and marketing. Some of that also comes in through requests on LinkedIn for me. And third is, of course, the referrals which happen from existing customers. Now, what is default, which I have not mentioned with the obvious one, is, of course, a large sales team. That is personal one-to-one selling. I don't think that has gone away because these are all mid to large-sized companies. We can't do the pure online PLG, product-led growth kind of ideas. But what I want to change is, and I call it the base and the chase. So I would say we have, a company, and that applies to every company. The base is the customers you have. So there the question is, how can you retain them? How do you grow the NRR, the net revenue retention? If last year they paid X, can you get them to pay more than X this year? So that's how growth, that's one track of growth which happens. But then there is also a large segment of customers you don't have. That's what I call the chase. So you're chasing these customers. Now, one of the things which we've been looking at, and I've been exploring personally, is, can we create simple landing products where today the typical sale time is about 90 days to 120 days, many times 3 to 4 months. But can I get a foot in the door in 10 days? Can I get access to some billing relationship in 30 days? Can I become the second ESP or the second SDK in 90 days? So without selling my core product, can I use other methods to effectively get a foot in the door? Because what I've seen is, once you have if you see a good sales person, actually builds a relationship, because in our cases, many times the contracts are annual contracts. So you are waiting average 6 months before you get an opportunity to break into an account, to switch, and also frictions in switching. But with every product, there are pain points which are there. With our product, with our competitors' products, everyone is always, I keep saying, the first year is the honeymoon period, everyone's happy at the customer end. Second year, doesn't matter which product they buy, they're always wanting to see what else is there new in the market out there. So that is where, if we can get a foot in the door, you will now start listening to the customer on what are the pain points. See, we have in a way a thali of solutions, like a Swiss Army knife of answers. We know. What I don't know is which are the specific pain points. Every customer has slightly different pain points. If I can build that relationship of trust and get to what the pain point is, it increases my chances of switching when the time of renewal comes in. So that is where I think the best example of the landing was done by HubSpot many years ago. They had this website, it's still I think there, called Website Grader. So you could actually come in there, just type your website, even you can go there today and do it, website URL and an email ID, and it will then send you what is wrong with your website, what is right and wrong with your website. Everyone will do it.
Like
So
loading time or SEO or stuff like
yes.
that.
And for HTML challenges, etc., which are there. This, I think, has been the single most powerful inbound lead generation that's been there ever in the history of B2B selling. B2B marketing. Can we create something like this out there?
Was Salesforce acquisition of Slack for a similar goal?
No, I don't know much about the backdrop to the acquisition. But I would say for Salesforce, and they have done many large acquisitions. So Salesforce has been acquisitive through its history. I think for them it is more of the fact that you can sell more into the same buying center,
increasing the
relationships,
average contract values.
The average contract value goes up. You can get some more efficiencies out there. Well, I don't think they can use the data that's flowing. So it was definitely not for data that is out there, because all those are confidential conversations out there. And also, I think for Salesforce, at some point of time, when the core business growth slows, market is expecting a certain growth at the EBITDA level, okay, for sustaining your stock price high at the multiples which it has historically been at. So you need to have the constant acquisition play for sustaining your price also.
Why haven't you gone public so far? Profitable, 100 million revenue.
Yeah, so I wanted to go public maybe three or 4 years ago, and I got I spoke to all these bankers. I got great inputs on, of course, what we would be worth when we would go public. We have 25% ESOP in the company, another very important reason to go public soon, for liquidity for employees. Though we have an internal buyback program, but I can't do it at the same price at which the market would value us. One of the bankers I met, he said, Rajesh, look, getting you a listing is very easy. How confident are you of your earnings or your numbers for the next 2 years? Because it will take 9 months for you to do a listing. That's the process. And it will take, and at least for the next 4 to 6 quarters, you have to be very confident. Otherwise, the stock price will not sustain, because people are valuing you on forward multiples.
Right, some future expectations.
Future expectations, right. And what I had started to see a bit of a slowdown in marketing spends at that time.
Why was that happening?
See, partly VC funding has started coming down. I think during the COVID era, people overspent on marketing in the whole business for customer acquisition, especially in India. which is one of our largest markets. So we saw some rationalization starting to happen. And also competitive activity keeps increasing, of course. And brands, unfortunately, try to optimize MarTech expenditures rather than optimize AdTech expenditures. That's the other tragedy that I see in our space. Anyway, so I could not say yes to that question. How confident was I of forward-looking earnings sustaining? So then I said, let me not get into that because until I am very confident, it's a very difficult bet to make, because you don't want to have a listed company and then have the quarterly pressures also and a falling stock price. That's a very toxic combination. In my life, my father had told me this long time ago, even before I started. He's saying, be very careful when you're taking other people's money. If possible, avoid it.
Right.
But at that time, he meant more in the context of a loan rather than equity in a listing. But I'm always that much more careful when one has to take outside capital.
But is it on the roadmap?
Yeah, IPO is definitely. I think if we can get now. So now the challenge, of course, is that there's the AI element also in there. That we have to. SaaS valuations have fallen 50-70% in the last year.
SaaS apocalypse, as they're terming it. Yeah,
absolutely. So what I have to be very confident about is that we have a very powerful AI story, we have a retention story, and we have what I call the sort of 4 M's along with the blue ocean part. There's some parts of our business are at least in the blue ocean where we have a moat, we have a monopoly in that particular segment, we have a way to multiply. There are multiple paths for us to make more money, and of course the 4th M is money. That there is a secure or there's a reasonably well-protected cash flow coming in the future, because that's what markets are valuing companies on. So my belief is that this, what I spoke to you about on this alpha outcome-based pricing is one. There are a couple of other ideas like this that I'm working on. I had written an essay on my blog. By the way, I write every day on rajeshjain.com. Hundreds of essays on marketing. So one of the essays I did on B2B SaaS saying that SaaS or B2B software companies need to look at 2 new revenue streams. We spoke about outcome-based pricing, but the second track is actually also if you're selling to B2C companies, can you create ads as a revenue stream? Can you monetize attention? So I'll give you a simple example. We send out zillions of emails. We charge people on per email. What if the emails were free? I call it 0 CPM. And what if we could run third-party ads? So make email into a attention and monetization surface rather than just a sell and notify surface.
Let me quickly wrap up with one chapter of your life we haven't spoken about. Are you the man responsible for the election of Prime Minister Modi?
I think I was one of many people who worked. Okay, so I'll tell you my role, and I've written about this, I've spoken about this earlier, but not as much. Because in the political space, it's better to be quiet about what you have done rather than talk a lot about it. And I'm not in the business of politics. So between 2011 and 2014, I had set up a separate team to work from the outside for Narendra Modi when during that time he was Chief Minister of Gujarat.
What was the trigger? How did you discover this space or this problem?
To go back a little bit in time, 2008-9, there was a slowdown. We were also very small. We were doing our SMS business, and the BJP was looking for an SMS vendor at that time. That's how I got connected with, at that time it was Piyush Goyal. He had come to vet us. And I just happened to talk to him saying that, there are a lot of people like me who are unhappy with the direction of the country and who would like to help out in some way. We are middle class people. We don't attend your rallies and all. And that's how he said, other people have spoken to me also along similar lines. So then a few of us professionals got together and created Friends of BJP for the 2009 elections. So we organized events for what we called middle class India, effectively. I mean, who would not attend rallies at, say, large grounds and all that, bust and whatever. So you can, first time, you could actually ask questions directly to the politicians across the table in groups. Of course, BJP lost the elections quite badly in 2009. But that idea that people like us can perhaps be engaged in politics. I have no background in politics at all. Sort of got triggered in my head. In 2010, I wrote a blog post publicly in June 2010, saying that the BJP can win a majority on its own in the 2014 elections. This was what I called Project 275 for 2014. And I only analyzed data. I analyzed the outcome of elections. I realized that the BJP had won 299 seats at least once out of the 543. And that if they needed to win a majority in 2014, the election had to be not a summation of state elections, as had started to happen in India with the coalition governments, which were getting formed, but it had to be a wave election. It had to be a very different type of election, a national election, not a summation of state elections. And if they got a 90% hit rate, they'd be home. So I wrote this publicly on my previous blog at rajeshjain.com, at emergic.org. And around that time, someone had connected me with Narendra Modi when he was CM of Gujarat. So I met him a few times. I said, look, I'd love to see a different future happen. I mean, Gujarat at that time was seen as the model of development also. I mean, when you could actually see the difference in road quality as you drove from Gujarat to Rajasthan. I used to go to Rajasthan very often. You didn't need a border sign to tell you that the state has changed. But what I told him also at that time is, I want to work from the outside. I don't want to become a vendor. I don't want to work from the inside, where I knew that a lot of the politicians, I'd seen it earlier, did not value people from the inside. And I said, I don't want to be alone. Otherwise, I'm just like 2 hands, 2 legs, 1 brain, that's it. I said, I'll do what I do best. I will create a startup to work for you, but from the outside, I will fund it myself. I will not take your money. So that's where I created a startup called Neeti Digital. We did 4 things. We did media. We had a portal for pro-BJP news, pro-Modi news, because that was not the case what was happening in India at that time. You have to go back to that period. It was analytics, so data aggregation. I built a site, IndiaWorld.com, which is still active. I think it's still the best elections data website in India. The design is very old because I've not updated it, but it's still one place where you can get election results since independence in a nice manner, queryable manner. Then we did analytics and a volunteer.
So IndiaWorld is a site for analysts, not for Aam Janta.
No, it's for analysts, people who want to figure out what happened in past. So the traffic peaks at election time. The elections data, I think, should have done this job, but they still put out PDFs from election results.
Okay.
You would take the PDFs and then digitize those and all of those things. Analytics was about using ideas from the Obama campaign on how to build a better ground campaign, how to figure out who is supporting you, how to get out the vote. So lots of interesting ideas. I brought a tech and sort of media perspective in there, but I ran it myself. And I was very clear that once the 2014 election gets over, I'm back to Netcore. For me, that was that 2011 to 14 period.
Staying with what you did there, sorry, can you repeat the name of the initiative? You said Neeti?
Neeti Digital.
Neeti Digital.
NITI was New Initiatives to Transform India. This is a precursor to the Niti Aayog word, which was Niti was a very nice word and acronymized.
So this personalization that you were attempting, how did it actually benefit the BJP? Like, were you able to give them data that your people should call these voters, or like how did it actually impact?
We ran multiple things, but one of the initiatives we ran was that, look, if you supported the BJP um, uh, send an SMS with your voter ID to a specific number. And then we had mapped the voter ID to the polling booth. So we had done some data analytics work at that time. So this way, on election day, and this is exactly how the get out the vote, what they call GOTV in the US, get out the vote election day works. How do you identify your supporters? How do you make sure on election day they vote? Because it's eventually not the support base that you have, but how many of the supporters do you get out of the polling booth? So there was a very good book called Victory Lab by Sasha Isenberg, which had come out, which actually it was a political science book, and I'd read that book. Amazing ideas on electoral politics, and I'd seen some of that in 2014. 2014, and 2009 when I was
with
in the
Obama.
first,
Okay, with first.
in
Okay.
first work that I'd done, and it was very little. Actually, it was all sort of there don't be the parties would not know who their supporters were, uh, and therefore it was all just whoever voted sort of voted. And with the Obama campaign, I realized that it was very, very scientific. They knew the supporters, they would make sure that they voted on election day. And we tried to do this in many of the polling booths because BJP has a very good ground presence. But who to bring out to vote was a bit of a challenge. So that's the sort of element that we brought in.
And post-election, you were continuing that journey?
Post-election, I was very clear that my job is done. So I had no interest on that side. But then there was one question, a few of us used to talk about, why is India poor? And I had no background in economics. And a friend would actually educated me on some of these ideas, Atanu De. He educated me on many of these ideas on why is India poor. Parth Shah from CCS, Center for Civil Society, also helped. I attended a number of conferences in the US. I taught myself some of these basics in economics. I'd never learned any of this in my life. And then the key idea basically boils down to what's called, we use it very lightly, the word freedom. Individual freedom, economic freedom, political freedom. And then when we analyzed a little bit more, the root cause is effectively the Constitution of India, which is effectively a hand-me-down from the British government, 1935 Government of India Act, meant to enslave, not to free a people. So then I tried to do a few things. I tried to create a movement to try and change India's constitution. Of course, didn't go anywhere. I was very naive. I tried to free the Indian cities, from the clutches of the chief ministers, because urban people are migrating to cities, and then cities are sort of, look at the infra and look at the state of many of our cities. Because the cities, the money is sucked out, but not enough comes back for building the urban infra at the level at which it should be done. Then I tried to create something called Nai Disha, a new direction for India. One of the ideas in there was Dhan Vapasi, that there's a lot of wealth in India which actually belongs to the people of India, which if you can hand back to the people and let them decide what they want to do rather than these stupid zillions of welfare programs, a lot of where corruption also happens. The idea was that you look at Lutyens Delhi, you look at defense land in cities,
or even railways land.
PSUs. The government. So finally, it's also what Modi had said in 2014. The government has no business of being in business. So there were these ideas, and I thought I could educate people on some of the core ideas of classical liberalism, which is what helped America become what it is. The American Constitution is something you can carry in your pocket. Of course, I was too naive, like I said. I couldn't change any minds just by making a few videos and writing some things. I couldn't do anything. So then come 2019, I said, look, this is not going to work. So I shut that down and then back to Netcore full time.
But do you think this is a chapter you will open again?
No.
No? Okay.
So, see, it was very clear to me. I've seen politics at reasonably close range than most people of our types. It is not for us. In India especially, it is a very different ball game when it comes to the political process that is there, even the electoral process that's there. It's very hard for people like us actually to make any sort of difference. So I said, I did a lot of essays at that time on what we need to do. We had a Naidisha manifesto, and I read it even after all these years. I think it's still a good one. Then Vapasi is still a very good idea. But I don't think they're going to they're going to make any progress. I said the best that I can do is as an entrepreneur, if I can do well in my life, and then if I can give back in some ways through philanthropy, that's a great chapter. Like in ID Bombay, two of us have set up a fund for helping professors take faculty research to IPO. So we call it IP to IPO or lab to listing. So it's like so things like this, where I think I can use my out of the box thinking, my entrepreneurial skill sets in fields which are not linked with government, but I think there's plenty of things which you can do in life. Everyone looks for, I think, what David Brooks had once called in the title of his book, The Second Mountain. So when you're in the 50s, you look at what's coming up. Jim Collins' new book that's coming up, What to Make of a Life, talks of very similar things. Ask this question late in life, and how do you sort of keep the fire going? Of course, for right now, it's all Netcore. But at some point of time, what are things which I can do beyond Netcore is absolutely what I want to look at. But politics is not one of them. I think entrepreneurial linked for prosperity is how I would put it.
Amazing. Thank you so much for your time, Rajesh.
Thank you very much, Akshay, for inviting me. Wonderful talking.